Welcome back. My name is Shyam, and I am here to manage your money and grow your wealth. So today we're gonna talk about how to select the best mutual fund. So everyone is planning for the mutual fund, but hardly they are able to make any decision. So before many of uh, many of us want to know what is the mutual fund and what are the different aspects that we need to take care before investing in the mutual fund. So how to select a mutual fund? So I've come up with the nine ideas that based upon you can make a decision. So these are the very practical, very powerful, and uh, very effective that you will take a decision. It will allow you to make a right decision to select the investment in a mutual fund. So in mutual fund investment is very promising and a very prominent one in order to gain the financial objective, to achieve the financial gain. So we have the different financial objective in our life. So some people have the if you are in a different phase of life, if you just started your career, so you need to uh, create some extra wealth, or you need to create some extra passive source of income. So you can treat this mutual fund as a passive income source as well, because you can withdraw the regular paycheck in the form of systematic withdrawal plan, SWP. You can probably heard this term, but shortly I will make this video. So I gonna talk about the nine different aspects that you need to check before investing, and how you can select and your best mutual fund. So before starting, please subscribe my channel and like the video. So now let's get started. So now first one is your financial goal. So you need to think about your financial goal. So what is your financial goal? Many people have the different financial goals. So if you are planning to have some vacations, if you are planning to have some foreign tours or vacations, so you need the fund, you need the money. Or your children need to have the higher education, so you are planning for the higher education for your children, then you can have the financial goal. And you're planning for purchase some house or some car. So these are the different financial objective. Or you are planning for the retirement and you need the regular cash flow, the regular income. So based on your objective, the mutual fund is best suited for the different objectives. So either you are the adult, or either you are the young, or you are coming to the retirement age. So no matter, this mutual fund is very promising and a reliable source of investments. But you need to think which mutual fund is the best to choose. So first one is your financial goals. So there are the different financial goals, like the short term, long term financial goals, then short term and medium term. So for the long term financial goals, you may be probably planning for your retirement. So long term goal is more than 5 years or 10 years. So you can plan if you want if you have some retirement goals. Otherwise, you can plan for the mid-term goal as well, mid-term financial goals. Like if you want to purchase some house, or if you want to purchase cars, or you are planning for the higher education for your children. So this mid-term financial goals is also can suffice. Can You can complete by the mutual fund investments. So once the first to establish your financial goals, what do you want to achieve? What is your objective by investing? Either you want to uh, uh, either you want to make the retirement planning, or you want to purchase a house or car, or you are planning for vacation. So but first of all, set the objective, what I need to achieve. Or you need to simply create the wealth. That is one of the best objective you might have. You are planning to create the wealth, or you want to create the multiple source of income. So investment mutual fund is one of the income sources that you want to create, the passive income source. So based on your financial objective, once you need to decide, so in what type of goal that I have. So once you decide your financial goals, then second one is your risk appetite. So what is the risk appetite? So risk appetite is the amount of risk that you can afford. So mutual fund is subject to the market risk, that you always heard this term. So it is true. So mutual fund investment is volatile market. It's a equity market. So there is a risk also associated. But keep one thing in mind, that if there is a risk, there might be the chances of reward. So the amount of risks you take, the the amount of chances of profit you will grow. So there is a risk, but there is also the profit. So you need to consider, and you need to adjust according to your needs. So how much risk I need to take before investing in the mutual fund. So once that you establish, then you can start investing in mutual funds. So identification of the risk. So how much risk do I need to take? Do I have the I'm very aggressive investor, so I need to take a high risk. So depending upon if there are the other investors that they do not want to take the risk, so there are the options available in the mutual funds. But decide your risk, what risk you want to take. So if you want to take the high risk, medium risk or low risk. So based on this, this is the risk appetite you need to decide. Third one is asset allocation. So what is asset allocation? So in the mutual fund, your portfolio is diversified. So your fund manager allocate your fund in the different portfolio, different assets. So there are the equity assets, bonds, ELSS funds. So based on this, you need to consider how much percentage of your fund that you require, that you need to allocate. So based on my suggestion, so this is the best that you can invest the 65% of your fund in the asset, like equity. So in the equity asset. So what is equity asset? So equity assets is the stock market. So if you invest if your fund manager invests the 65%, so generally it's happened the fund manager invests the 65% of your amount in the equity market. So you can have the more probability of getting the profit, because the equity market has the high potential of to get the profit as compared to the our traditional investment instrument like FD. You can see that FD gives you the fixed deposit rate, but in the equity market there is no limit. As the profit these companies gain, the dividend you will get. So equity allocation. So 65% is the best asset ratio that you can allocate in the equity. Then 25% in the debt, or in the debt fund or the bonds. So if you allocate 25% of the debt or bond, so you can diversify your risk. So I'm not saying that 100% of your investment should be in equity, but no, 25% in the debt. So debt fund or bonds funds are the less risk than the equity fund. So in this way you can adjust your percentage. So you can adjust either 50% in the equity or 50% in the debt or the bonds. So in this way you can manage your risk, you can minimize your risk. Yeah, so risk asset allocation is a very basic aspect that you need to consider before investing in the mutual fund or selecting the best mutual fund. So this is the one of the best approach you can take. Then fourth one is investment horizon. Investment horizon. So what is the investment horizon? So it is the how much amount, for how much long period you need to invest in the mutual fund. So there are the three type of the investors. So one are the long term investors, second one is medium term, and third one is small term investors, short term investors. So so based on your needs, you need to identify for how much period of time, so how much long I need to hold my mutual fund. So the equity funds are the best if you choosing for the long term investment. So you need to allocate the asset 65% or more if you want to hold the asset for the long amount of time or the long period. So let's say that 10 years, more than 10 years, if you want to invest in the mutual fund, then you should invest in the equity fund. So equity fund has the higher potential to the profit, to get the profit. So you can get the 15%, 18%, or probably 20 to 25% the growth that have the potential in the equity fund. So you can just consider this long-term investment for the equity fund. So in the medium or short term, so if you are investing just for the 3 years or 5 years or less than 5 years, so you can just invest in a debt fund. So debt fund or the bonds funds are very promising that you will it will give the high profit if you invest in the medium term or short term. So let's say less than 5 years and more than 1 years. And third category is short term. It is the for the 1 years if you want to invest for the 1 year or less than 1 years. Then in this category there are the liquid funds or the funds called the overnight funds. So these are the very promising funds that you need to consider based upon your investment horizons. And fifth one is a risk profile. So what the risk profile you have? So a risk profile is very important that I have covered in asset allocation. So there is a link between the asset allocation and the risk profile. So this aspect very closely related. So your asset allocation decides your risk appetite. So if you want to take a high risk, so if you are the aggressive investors, you require the profit, but also there is as I said that if there is a risk, there is a profit. So you do not worry about the risk, but yes, you need to consider the, because of the market is volatile and no one is predicting. But you, if you take the risk, you will get reward. So it depends upon the asset allocation. So the amount of the investment you have in the equity, the amount of the huge potential profit you will have. So the risk profile is very important aspect that you need to understand and consider how much amount of risk I need to take. So first establish your risk profile. Then sixth one is taxation. So what is the taxation? So taxation is the capital gain. So if you need to withdraw the money, so if so, for example, if you hold the mutual fund, if you are invested in the scheme for the 1 year, 3 year, or 5 years, or the 10 years, so long term or short term, and after your capital gain, if you want to take the money, if you want to withdraw the money, so you will have the taxation. So tax is applicable. So you need to consider this aspect also. This is also important. This will so how much tax you will applicable. So for the long term capital gain, if you hold the mutual fund for the long term, then the your sorry, it's the short term capital gain. So first of all, I will talk about the short term capital gain. So for the, let's take an example, you invested for the 1 year or the 3 years or less than 3 years, then you need to withdraw your money from the mutual fund. So in order to gain your capital, in order to your profit or your capital gain, so what the profit you get, so on that profit you have the 15% of the taxes for the short term. So if you are withdrawing the money within over a year, or let's say 1 year, so you will have the short term uh, capital gain taxes. So these are the 15% of your investment. So total of the 15% of your investment, this 15% amount of your investment you will get deducted. So this is very important to understand what the taxes are applicable. So this is the short term capital gain, and the long term capital gain, what are the taxes? The 10% taxes are applicable. So again, here is a condition. So for the long term capital gain, if you have the profit of more than 1 lakh, so in excess of 1 lakh, you will have the 10%. Let's take an example. You invested for the long term and you have your capital gain, or your, what I say, your profit is 1 lakh. So on the 1 lakh, it is the tax free. But any amount exceeds the 1 lakh, then there is a 10% of the taxes are applicable. So this is one of the benefit for the long term. If you want to gain the higher benefit, then you should go for the long term, because on the profit amount that exceeds 1 lakh, only the 10% of taxes are applicable. So this is very important to consider the taxation as well. Then seventh aspect is lump sum or SIP. So what is lump sum and what is SIP? So lump sum is the amount that you are investing at a one time. So if you have the funds available to invest in a one time, so you can go one time and buy the mutual funds. But there are the other options that you can go for the SIP. What is the SIP? SIP means the systematic investment plan. So you can invest your some amount of money every month. So let's take an example. You can start from the 500 to 5,000, or there is no limit, but SIP start from probably 500 to 5,000. But it depends upon the type of mutual fund. But you need to decide certain amount that you need to pay every month. So that is getting invested in the mutual fund. So one of the benefit of the SIP is that you can have the compound interest. So this is very powerful compounding. Uh, you can think and you can consider for, if you want to start SIP, then SIP is very best, because it has the compounding benefit for the rupee. So this is a benefit of SIP. So think about the SIP if you want to invest in the mutual fund. Then it is a fund manager or fund house track record. So what is the fund manager? Who is the fund manager, and what are the fund house track records? So fund houses, the mutual fund are managed by the fund houses. So these are the companies, these are the agencies that manage the overall track of the mutual fund. And the fund manager are the people or the person that invest your fund, that allocate your fund in the different aspect of equity, like in the equity or the debt. So these are the fund manager are the people that allocate your fund. These are the people that manage your fund, and the all the track record and all the overall profile or the benefit or the profit are solely depend upon the fund manager. So you need to consider who is my fund manager. So you need to read the profile of the fund manager. He is new, or has experience fund manager. So choose the experienced fund manager. So read about the fund manager's profile, his experience. So this is matters, because ultimately whatever the profit you get from the mutual fund, that is because of your fund manager. So where he, as per his knowledge or his deep knowledge of the market, where he allocates these funds depend upon the volatility of the market, and it will gives you the profit. So you need to read the history of the fund houses and the fund managers. So this is important. And ninth one is expense ratio. So what is the expense ratio? Expense ratio is the annual fees to manage your mutual fund. So this is the fees basically take by your fund manager or the fund houses. So this is the fee that these people allocate your fund, or they will give you the profit, or they manage your fund. So expense ratio is probably calculated in the percentage. So you need to choose the expense ratio that is below the 1%. So you need to choose the expense ratio that is uh, between the 0.4% to 0.1%. So this is the best expense ratio that you can have, because ultimately on the capital gain this expense ratio is also getting deducted as a fees. It may be deducted as annually, somehow the quarterly. So you need to consider what is the expense ratio and how frequently that is getting deducted from your investment. So this is the very important. So 0.4%, I suggest it is the best expense ratio that you can go for any fund that you are choosing. So these are the 9 aspects that I covered that will help you to choose the right and choose the select the right and best mutual fund. So if you are finding some difficulties uh, in any one of these segments, then it is best for you to take the help from the financial advisor. So I hope you do not need to take the help from the financial advisor, because I covered everything a lot, and yeah, so it will help you to choose the and select the best mutual fund. So thanks for watching my video.